Hi all, this is Algo, and I'm here to talk to you about risk management. In reality, this could be a 5-second video. Keep your risk at 1%, dumbass. But I'll go a little bit deeper than that. For those that don't know, I've been in Bot's room for near on 2 years now, and have had a bit of a roller coaster ride. So what I'll present here is based on my experience. Okay, the basics of percentage. Percentage is a fraction expressed in hundreds. 1% is 1 over 100. So if you have a $100 account, you divide that by 100 and you get $1. That's not your trade size. That's your potential loss. That's your risk. To get your trade size, you divide that $1 by your stop loss pips. In my case, it's 10. And that equals 10 cents. So the trade size is 10 cents per pip. Total risk, $1. Expressed as a decimal, this is just a bonus. If your account currency and the trade pair base currency are the same, for example USD, 0.1 of a dollar lines up almost perfectly with lot size. All you need to do is shift the decimal point one place to the left. $0.1 and 0.01 lots are both 10 cents. Don't increase your lot size while you're losing more than 10% of your trades. Keep your losses to a minimum. When you are as good as just Fran at chart analysis, then you can start fiddling with your stop loss. We all need to crawl before we walk, and walk before running. Trading is no different. Start with baby steps and you'll soon be sprinting. As BR says, the markets are unlimited. And they are. But always remember, risk is the potential loss, not the hoped for win. Always keep that in mind when setting your lot size and stop loss. As there is no lot size between 0.01 and 0.02, your risk will actually go down as your account approaches $200. When your account reaches that stage, put your lot size up to 0.02. You're risking 20 cents per pip by 10. You're risking $2. Still the 1%. When your account reaches $300, change your lot size to 0.03, 30 cents, etc. Understand that every trade is a potential loser. The market is a living beast. Trump can make a tweet and make the sweetest setup on the charts go against you. Anything can happen. Trump makes a tweet, there's a terrorist attack, blah, 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 blah. There's always the potential to lose, no matter how good you are. I'll do some just some quick calculations here on the old calculator. Mine has a % key, but I won't be using that, just in case yours doesn't. So for our example, we've got a $100 account. To get a percentage, we divide it by 100. We get $1. $1 risk divided by our 10 pips stop loss. There's our $0.1, 10 cents, 0.01 lots. Excuse me. A little way down the track, your account is now $500. Again, find 1%. It's $5 divided by our 10 pips stop loss. 50 cents. 0.05 lots. Right, it's a few months down the track and you're kicking ass. That is now your account size. So we find 1% of that. That's your risk. Again, divided by the stop loss. That's your pip value. 14.7 lots. Alright, that's enough of that. It's basic. I'm sure you understand. Now, I don't want to see in chat or hear MT say someone else has blown an account. Keep your losses to a minimum and accept the small loss when it comes. You'll make it back on the next couple of trades, so don't stress about it. I think that's about all I've got to say. I'll go out. Well, I'll go back. Something else I want to say after watching BR's $1 to $1,000 per pip plan. It's a great plan, but it's high risk. $1 per pip at $100 is 1%. With a 10 pip stop loss, that's 10% risk. Here's what I recommend. Practice what I've laid out in this video previously about the 1% risk for a month. 20 trading days. If after that month you are winning consistently, like in those 20 trading days you might have lost one trade. That's what I call consistent. For BR's plan, that is the consistency you need. If you achieve that, it's pretty much, well, it's about 95%, I think. One loss in 20. Yeah, 5% loss. So if you achieve that, by all means, if you've got the stomach for it, pick up BR's plan. And you'll pretty much be a millionaire several times over by Christmas next year. Oh, sorry, it's this year now. Yeah, that's about all again. I'll go out. See you in the ring.